Take a deep breath. Today, in this explainer, we're diving into a topic that usually causes a lot of anxiety, but it really doesn't have to: corporate year-end. If you're a Canadian incorporated owner-operator and you're using the Small Business Financials Workbook, this is absolutely for you. We're going to build a clear, calm review loop so that handing things off to your accountant is a breeze, and more importantly, completely independent of your memory.
So here's our 5-step roadmap for today: reframing corporate year-end, reviewing your foundation, taxes and timing items, verifying your statements, and finally, the accountant handoff. Let's jump right in.
Within our overall framework, we are sitting right at the maturity layer for tax and financial discipline. Our earlier guides covered why you need the workbook and how to do the basic setup. But now the focus shifts to maintaining a professional review loop. You've got the system in place, so let's use it to really gain control.
Okay, Section 1, reframing corporate year-end, preparation over reconstruction.
Let's lower the stakes a bit and change how we think about this whole process. The crucial takeaway here is that year-end should not start at year-end. Your goal is absolutely not to prepare the T2 corporate tax return yourself. No way! The real goal is simply to organize your records so that a professional review is faster, smoother, and frankly, cheaper. You aren't trying to reconstruct history, you're just confirming the story your records are already telling.
Moving right along to Section 2, reviewing your foundation, setup rules, and money movement.
Before you look at a single transaction, you need to verify your core setup rules. We're talking about your fiscal year, your province, and your GST/HST details, things like the rate, filing frequency, and quick method settings. Also, make sure to confirm your first-year status and accounting method. And critically, double-check any opening balances for cash, unpaid bills, or assets. Getting this foundation right ensures your workbook is completely accurate right out of the gate.
Now here's a big one. You must review your direct bank activity completely separately from items that need special handling. Bank activity is straightforward, right? It's the actual cash that moved through your corporate accounts. Expense adjustments, on the other hand, capture things like owner-paid items, non-bank expenses, and reimbursements. Keeping these two completely distinct is a total game changer because it stops you from accidentally mixing personal spending with your corporate cash flow.
All right, Section 3, taxes and timing items. Getting ahead of the pressure.
Use your workbook's GST/HST summary to verify your key areas before the filing pressure kicks in. Check the GST/HST you collected from customers, the amounts who paid on business expenses, and the tax on any owner-paid expenses. This summary is great because it reveals your net owing or refund position, plus those handy filing helper totals. Knocking this out now prevents some pretty nasty surprises later on.
Next up, we have timing items, also known as year-end accruals. Basically, this means identifying financial events that sort of straddle the year-end boundary. Think unpaid invoices, unpaid bills, prepaid expenses, deposits, or deferred revenue. Now listen, your job as the owner is simply to identify and document these things. Do not try to guess the perfect accounting treatment all on your own. Just flag them so your accountant can work their magic.
Which brings us to Section 4, verifying your statements, the big picture.
Reviewing your statements together gives you a fantastic plain language picture of your business. Your income statement, that's the story of your performance. It shows exactly what happened during the year regarding income and expenses. Your balance sheet or statement of financial position is more of a snapshot. It shows what the corporation still owns, like assets, or what it owes, like liabilities. Looking at them side by side shows you exactly how healthy your business truly is.
Now, if a number on those statements doesn't make sense, you can empower yourself by using the Audit Trail review path. It's super simple. Start at the report total, track it down to the category, check the source sheet where it was originally logged, and pinpoint the specific entry or adjustment. Trace it back. And hey, if you still can't figure it out, just flag it. Getting stuck is perfectly fine. Hiding it is what we want to avoid.
And finally, Section 5, the accountant handoff, crossing the finish line. This is where the payoff happens. Prepare clear handoff notes covering missing documents, unusual expenses, and any questions you have about GST/HST, payroll, owner-paid items, or shareholder loans. Be sure to include your notes on those timing accruals we talked about and any unclear classifications. Doing this means your accountant has the actual facts right in front of them, rather than relying on guesses or trying to jog your memory. And remember, perfectionism is absolutely not required here. Here's what good enough looks like. If your setup is reviewed, activity is entered properly, your GST/HST is visible, accruals are identified, your statements make broad sense, you have an audit trail, and your unresolved questions are listed, boom, you are done. That is exactly what's needed.
To make this incredibly easy and repeatable, just match this workflow using the Year-End Readiness Checklist for corporations. It's an awesome tool designed to guide you through every single one of these review areas so you don't miss a beat.
So, as you can see, year-end becomes vastly more manageable when you prepare for it gradually. The workbook keeps your core records visible all year long, and that transforms year-end from this massive, scary cleanup job into a simple, logical review loop.
I'm going to leave you with this final thought. Ultimately, it is your money being earned, tracked, and reported. The more you understand how it flows through your corporation, the better equipped you are to make decisions that sustain and grow your business. Taking ownership of this review process puts you firmly in control of your financial future.
Just a quick reminder before we wrap up, Built to Thrive is for educational purposes only. It does not provide legal, tax, accounting, payroll, GST/HST, software, investment, financial planning, or filing advice. Always make sure to consult with a qualified professional for your specific situation.